Busy week is ahead for global markets, and three risk-sensitive assets are flashing important technical signals. Today we're looking at dollar loonie, Aussie dollar, and the US500 index, and as fundamentals and technicals come together, these assets might be approaching decisive moves. So let's have a look at the charts and see which levels could define the week ahead volatility. And having a look first at dollar loonie, which have been sloping to the downside since testing the 1.4246 level. Well, if we look at the 4-hour chart, it seems that the price has formed a triple top bearish pattern around 1.4246. Well, that negative pattern was also confirmed below the 1.4170 last week when the price faced rejection around its 20-day moving average. So it looks like the risk is skewed to the downside, and the technical indicators down here are also reflecting the falling sentiment as the RSI is pointing towards its 50 neutral mark. The MACD is weakening below its red signal line, and the stochastics over here is approaching its 20 oversold level, but it has yet to fall below this level. So it looks like the short-term outlook is looking bearish, but of course we need a confirmation below the 1.4135 region where the support trend line is located, as well as the 50% Fibonacci retracement level of the 2025 downtrend. So it will be a critical region to watch ahead of the US CPI data, which come out on Tuesday. In the same day, Kevin Warsh will testify before Congress, both on Tuesday and Wednesday, and it would be interesting to see what is his whether he has some more explanation about his inflation outlook, as well as his rate expectations after he removed after he tried to remove forward guidance and also removed the easing bias from the Fed's policy statement. So it will be a tough session for Kevin Warsh, and inflation numbers, and particularly the core measure, will be closely watched as investors expect the core measure to remain steady at 2.9%, still above the Fed's 2% target. Those data could create some volatility on the in the US dollar. Now, as regards the Canadian currency, well, the central bank is scheduled to decide on interest rates on Wednesday. There are no expectations for a change. Interest rates could remain steady for another session since September 2025. But communication will be closely watched after the Canadian economy has stagnated in the first quarter. The fourth quarter of 2025 faced a mild contraction, so it looks like a recessionary environment in Canada, which could obviously deter policymakers from being hawkish this week. Nevertheless, they may retain steady for longer interest rates given the geopolitical risks in the Middle East and the uncertain outlook about the Strait of Hormuz. And if that supports the US dollar, then we could see a rebound beyond 1.4170, which could scrap this bearish pattern and drag us back to the 1.4246 resistance. Then beyond that, the 1.4290 level is the 61.8% Fibonacci mark. This could also act as resistance before we reach the 1.4360 barrier. Now, the downside, well, as we said, the technical bias is skewed to the downside, so failure to hold above 1.4135 could meet the 23.6% Fibonacci retracement level of this up leg near 1.4081. A break below that could trigger a faster decline down to 38.2% Fibonacci, and the 50-day moving average, both seen between 1.3950 and 1.3980. And now looking at the Australian dollar versus the US dollar, well, this also looks to be facing some interesting trend signals. The pair has been trending to the downside, making lower lows and lower highs since printing a 4-year high near 0.72 76, there was, well, it looks like a bearish head and shoulders pattern have been confirmed below 0.7070, and the rejection afterwards near the 20-day moving average, particularly last week, that is also sending some negative signals, especially as this also coincides with the lower band of this bullish channel, which the price seems to be struggling to overcome. So this upside move could be just a rebound within a temporary rebound within this downward pattern. But probably we may get fresh volatility when China's GDP growth figures come out on Wednesday as well. So besides US events, China's GDP could also affect the Australian dollar, given the strong trade relations between the two countries. Expectations are for a slowdown to 4.5% year on year in the second quarter from 5% previously. This will be the first print of GDP growth from a major economy, and it could send also some negative signals about other economies if indeed the data slow down. So if the data arrive lower than expected, well, we could see a break below 0.6920. That could take us down to the 200-day moving average at 0.6880, which keeps support, which managed to help the price pivot at the end of June. If we break this, then all the attention will turn to the March low near 0.6830, and another failure here could send stronger bearish signals, as such a move would violate this sideways pattern that started at early in 2026. If that proves to be the case, then the 38.2% Fibonacci retracement level of this long uptrend from April 2025 at 0.6760 could come next into view. Now, in the event of an upside breakout, well, I would like to see a clear move beyond the 0.70 and 0.7030 number, which would violate this resistance trend line in order to target again the 0.7070 region and the 50-day moving average. And finally, looking at the US500 index, this market will face volatility from the earnings season, which starts this week on Tuesday. US big banks will be reporting from Tuesday onwards. Netflix financial data will be also out later this week on Thursday, while AI key players such as Europe's ASML as well as Taiwan's Semiconductor are also on the agenda this week. So those companies might be quite important to watch, given that this record rally is heavily dependent on AI drivers. So if the data surprise to the upside, if the companies provide a positive outlook about the AI technology and about the AI spending, we could see a bullish continuation. As we can see, the price has violated the symmetrical triangle. It faced support at the upper band of this triangle, so that confirmed that. So that actually kept the bias on the positive side. Nevertheless, I would like to see another green candlestick above the previous high from June at 7,578. In this case, a more convincing break above this boundary could drive the price towards new all-time highs, probably register somewhere between 7,700 and 7,730. Well, if that case fails and we see a pullback, then the 20 and 50-day moving averages seen between 7,450 and 7,470 could support the market ahead of the lower band of this triangle, seen near 7,360. Below that, the 23.6% Fibonacci retracement level of this uplift near 7,300 could be another key floor before we face a faster decline towards the 7,120 and 7,160 zone, where the 38.2% Fibonacci level is located. So, and looking at the technical indicators, well, we can see that despite the positive slope in the stochastic oscillator, this is close to 80. The MACD is gradually rising above its red signal line, and the RSI still above 50. So, The short-term bias is positive, but maybe we need another convincing upside move to target higher levels. So that's everything I want to share with you guys. Thank you for watching this video. If you like my analysis, please subscribe and follow us for more technical updates. Thank you for watching and see you next time. Bye bye for now.